Good morning, folks. Let me know you can hear me out there, please. And we'll get started in a minute. Okay. So welcome everybody to the 10-minute trades trade room. Of course, CPI. My name is Lee Goldstein. I'm the trading director at 10-minute trades. Good morning, Blessing. Good morning, everybody. And please remember that all the trades we discuss are for educational purposes. It is possible to lose money trading futures, so trade carefully, please. And let's talk about the CPI trade. Now, I have already entered one of my trades in. I'm trying to save a little time this morning because I have a lot of information I want to cover. So first off, let's talk yesterday for a minute. And secondly, I do want to welcome our friends on YouTube. We are streaming this morning on YouTube. We stream once a day on YouTube. Now, if you're on YouTube, if you go to www.familymoneytrades.com, we are having a free week in the trade room. So for non-members, you can come into the trade room and there's no delay. So www.familymoneytrades.com. Let me post that. So we always, we have a free trade room week every 6 weeks or so. I mean, it's very important to keep people interested and to let people see what we do. From the history of this company, we've always invited people into the trade room because that shows you the truth about if this style of trading is for you. Sometimes we could be the most profitable company in the world, and some people just might not like the style of trading. So it's very important to let people see and know what your method is like. And that's why we've always been proponents of having people come into the room. Members should never feel slighted. You should never feel that you're being taken advantage of because someone is getting some time, because you're getting all the bonuses of learning and all the risk info. I don't have to tell you the benefits of the trade room. If you're a member and you're here, you know why you're here. It's everything that we do flows from the trade room. So CPI, all right, CPI's been profitable. CPI's been very volatile. So I want to talk about some possibilities. Know in advance, this is a trade that could move so fast. You could get an error, right? We've seen it. We're not hiding. We don't hide anything in our trade room. There are reports that the market sometimes moves so fast that sometimes the software can't keep up. It's not a problem with our software. It's not something that you can change the programming and fix. From day one, years and years and years ago, when I started trading natural gas, I had programs write software for me. I was using TradeStation at the time. And I could not understand why sometimes my setups, they just wouldn't hold 100%. So, but I finally realized over the years that there are reports that make the markets move so fast that nothing can keep up with it. So the key is, so what do? Instead of getting scared and not being able to deal with it, be aware that you could have a trade that you might think is over, and then you look up and you see, oh my goodness, I'm in a trade with one contract. I thought I was out. Now, forgetting the reason, because the reason doesn't matter. This is the one thing that you've got to understand and accept. The reason why it happens doesn't really matter because we can't change the outcome. If we could change the outcome, then the reason would be important. But very simply, the reason it happens is because sometimes the market just moves so fast, your orders or your stop are not in a state that they're ready to be filled. It's really quite simple. So what happens is the software thinks it hit the stop, but it hasn't, or it receives an error and it tries to exit. And when it tries to exit, it puts the order on thinking it's putting a stop on. Everything happens so fast. Sometimes we're talking about a nanosecond, not even in a second. It's trying to fill orders, fill targets, place a stop, hit the order, move the stop. You follow? So you could get these very fast moves. CPI went from a history prior to the world crisis. We went to a history of not having a trade setup to having a very profitable trade setup. CPI has moved into a profitable trade setup. And that's why it's a family money trade. But I'm always honest and I'm always forthright. This is a family money trade with risk, okay? And it's a family money trade with risk because sometimes it can blow through your orders, give you extra ticks sometimes. You know, sometimes you get extra money from the market because things happen so fast. And then other times you get a bad move. So let's, we have to talk honestly because we all want to have success. So yesterday we had a very difficult WASD trade. Now, but keep in mind, the WASD trade has probably had like maybe 8 to 10 winners in a row. And I'm giving you anecdotal info. I didn't look back and count every WASD report, but we all know. I challenge anyone to even remember when the last WASD report lost money. You can't because it's been that long ago. So the point is, yesterday, it was a lousy WASD trade. So what do? Today, what I do from a psychological standpoint is I trade normally. I trade my plan, but of course, I know what the reality of a setup is. I know which setups are moving fast and which setups are moving slowly, and I adjust my trading based on what I think I should do to protect my account as best as I possibly can. I know that this trade can move very fast. I just know. I mean, it's what it does. So I just want to, put that out there. My goal here is not to scare you. My goal here is to make you aware that if you think you're out of a trade, but you see an order on, and that order is short, and the market's going down, 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 you can wait to get out. If the order is short and the market's shooting up, you want to hit the close button and get out. Make sure you're not in. So you have to be very, very, very aware when you're trading events. And it's like any system. You could be trading any system. Doesn't matter what. You could be trading a simple discretionary system. Something in the world could happen that could make the instrument you're trading go wild. And it could cause tremendous volatility in your particular trade. So you just want to be aware, okay? So I do have a very interesting, let's look at last, you know what the shame is? I can't find the video for September. In September, we got stopped on this trade for the first time in quite a while. But I also had tested a new setup that's not official, and I looked at it also over the last couple of months. And if somebody wanted a low risk setup to try, you can try bonds on this report, ZN and ZF, ZN and ZF. It would mean you could trade this report with a pretty low risk, because ZN and ZF, you can trade, ZF is $7 and change a tick. ZN is 15 a tick. So you trade one or two contracts and you can get involved in the trade. So just for someone who wanted to test, let's say you wanted to test my bond setup. Now, keep in mind, the bond setup didn't work last month. I got stopped, and I traded it live, but it was a normal, not super fast, not a crazy move, even though the market was very, very fast on this trade. So just if you're a tester and you like to try different things, you could try this in sim. You could trade bonds with a bracket of 4, a target of 4, 7, 4, and 12 if you're trading 2 contracts, 4, 7, and 12 if you were trading 3. Entry time I used was 8:29.59, and my stop was 8 ticks. That is a pretty reasonable bond setup for this report. Bonds didn't used to move all that much recently on this report, but they're moving much better. And bonds, it's a CPI, it's a pricing inflationary report. You'd think the movement of bonds would make sense on this type of a report. It does make sense. AJ, the bracket on bonds 4 to 5 is, I would say 4. I would say 4 because it wasn't a gigantic move. And the reason I got stopped last month is it didn't go far enough. But I think a bracket of 3 is a little bit tight for the volatility of the markets. Okay. So, but that's not what we are officially. It's not our official trade. But you all know it's my job to keep an eye on lots of different indexes. Also, Chantal, who works for us, tests different indexes. It's our job. That's what we're supposed to do. Okay. So you could see last month was a stop. We don't hide it. But you could see also that the previous months have been moving very large, but very, very fast, okay? So that's the issue I want you to keep track of, the speed. This report can go fast. Now, I am going to trade pretty normally. Yesterday we had a bad day. Today's a new day. I'm going to trade normally. I don't have any lingering effects psychologically from yesterday. It was a bad WASD trade. WASD gives us a bad WASD trade once a year. Usually we get that same style of bad trade where it'll give you a crazy whipsaw and it'll stop you out and it'll be a miserable trade. But then WASD usually comes back. It might give us another 8 in a row that are fantastic. So it's like one of our members in a room said yesterday, wow, this means that next month's WASD is going to be awesome. And there's a big truth to that because WASD does not normally stop out twice in a row. It's very true. All right, so I'm going to put on a gold CPI trade. So I right-click the chart. There's a lot of guests here. So also, if you'd like to support our company, we would love for you to sign up for the webinar that I posted in the chat, okay? In the trade room chat. We would love it very much. Come and at least register for my webinar on Thursday, doing it with Rightline. He's going to talk about Bitcoin, which I'm sure a lot of people are interested in. I'm teaching a lot of people what we always do, our trading reports and how we pick our trades. So we'd love it if you come. So let's get down to the reason we're here. CPI. The DMM is a bracket of 8. Now gold has volatility this morning. You could see gold is very bullish this morning. It's up more than $15, okay? Now, that's not uncommon. So that doesn't really have a bearing on my trade. We often come into the room and gold has strong volatility, or the NQ, or the index we're going to trade. It's normal. So what we want to be careful about is immediate volatility. Like 20 seconds before a trade, you don't want to see a 20 tick move. That sometimes might mean you might pass on the trade. So my gold setup, I pretty much used the DMM for the setup. I modify it a little bit, and I'll show you what I do. It's a bracket of 8, which is a decent sized bracket. I use 3 positions on gold. So in other words, I'm expecting, that first target is 5, which is perfectly fine. The second target on gold, I'm just thinking to myself here. So I don't have a problem with a 12 target as my second target, but look at the size of the moves, 40 ticks and 60 ticks and 70 ticks. There's certainly a possibility in there for a second target. It really does exist. A third target, sorry. So I would go for something like 21 ticks on my third target. The stop is 12. And then what I like to do, this has been a nice winning report overall. So I'm going to add an extra contract at target 2. Why not at target 3? The concept for me is the probabilities of hitting the second target are much higher than hitting your third target. The third target, you can make the third target 40 ticks and manage your way in and out of it. But I'm also trading the NQ, so I'm keeping my targets somewhat conservative because I don't plan on having a lot of time to manage, okay? Because I'm trading 2 instruments. And that's what I've done many times on this report. It's not like I'm doing it for the first time. I definitely don't recommend that anyone, unless you're an absolute expert, trade 2. The normal average trader should just pick one, choose the NQ, pick gold, trade one of them until you get really, really good. The other thing we do is we check our time by going to the website time.is. We check our sync. We're trading by time, right? That's what we do. We trade based on time. So you want to be in sync with the world's time because the reports are being released at a specific time. We discovered over the years, if you go to the website time.is, it'll put your computer, most people's computers, in sync. We have other tools in the file folder of the trade room. You can download D4 Time, which is a program called Dimension 4. That will help your computer get in sync if going to the website time.is does not work. Sometimes it doesn't work for everybody. Technology is what it is. It's technology. It's not perfect. So bracket of 8 is what the DMM calls for. The entry time. The entry time is 8:29:59. That's the important time. Now don't forget, if your computer's on Pacific time, you use the time that your computer is set to. A lot of times people will say, well, my trade didn't fire. It's because you might have set it to my time and not your time. Okay, it's important to understand. There's also a setting in Ninja that verifies if your platform is in the proper time zone. So you want your platform in the time zone that your computer is set to. I'll show you where that is in 1 second. So my gold CPI trade. And people should choose targets are a range. Target 1 can be 5 to 7, target 2 could be 10 to 12. it's not etched in stone, the exact target. Targets, if you've traded this before, you have a journal, I assume, right? The things that we like to stick with generally, the bracket, even the bracket could be adjusted. If somebody said to me, gold's volatile, I'm going to make a bracket of 10. Then you might want to make your target 2 a tiny bit smaller because you're giving up a possible little bit of profit by making your bracket bigger. So sometimes you might want to make an adjustment for that. It's possible. Okay, so entry time, 8:29:59. It's a breakout trade. If you go by the DMM, you could choose a target of 5 and a target of 12. It could be anywhere 5 and 7. You could use a target of 6, target of 11. Nothing wrong with that. That'd be a perfectly good setup. The stop is 12. Generally, we like to keep the stop as per the DMM. Okay, and the bracket this morning is 8. Right now, gold is opening. Usually when there's a giant report, this morning, this is a giant report. CPI is very important. It sometimes creates a muted gold open, not always, but sometimes. Now there's also a setup on the NQ down at the bottom of the daily market report, okay? 15 tick bracket, 20 tick stop, targets of 10 and 25. Entry 59, okay? Now I have that set up. First, I'm going to put my charts on live. My NQ setup is very similar to the suggested setup. And we've been testing and or trading the NQ live on this report for quite a few months. That's not a random new setup, okay? So my bracket is 15, and I'm doing similar on the NQ, where my second target is an extra contract, and there's a very good possibility of hitting that target. It's very possible that it could hit it. So I'm just looking for 7 ticks on my first target, 15 on my second, 22 on my third. And the stop is 20. And I'm going to save that as a template. So I go to template and I go to save. And I already have a CPI setup saved on the NQ. You can see it here. So if I click on that and then click save, it'll update that template. Do I want to replace it? Yes. So I update my template, and now both my trades are set up. Before I enable them, I'm going to double check my time. Okay, it's early in the morning. And see, my entry time is 00 on the NQ. So one of the most important things to do is always double check your time. And I'm guilty of not doing that. Today, I decided to do it. It saved me from possibly getting filled right now. If the time is 0, right? If that first number is 0, the software will assume midnight has passed, and it'll put the orders on the chart immediately instead of waiting till 8:29:59. Everybody understand that? It's really important to understand these types of things. Now, what I might want to do is have my news off to the side. There's a lot of news, a lot of elements to the report, and I'd like to be able to see my whole chart because I'm trading, okay? I want to see my whole chart because it gives me more room. So, I could leave this here, but my NQ, if it shoots down, I'm not going to see it. And I'm trading, so I want to be able to see what might happen, okay? I also have Financial Juice in the background. I'm listening to their Squawk Box. They are a news trading tool that we use to help us with trades, okay? We listen to their Squawk Box where they give us the result, like what's the CPI? CPI is the Consumer Price Index. So it's a big number that has a bearing on what's going on with inflation. I think everybody knows what's going on with inflation. Inflation is really high. For some reason, the Fed, they don't want to accept the reality. I'm not sure why, but they're going to have to come around to the fact that there's tremendous inflation. Maybe not everywhere. And the big thing with the Fed is they think it's temporary. I don't. And why is it not temporary? I think the real issue is the bottlenecks in the supply chain. You just have too many ships piled up outside the ports, unable to unload. There's no way to put merchandise. There's all these, it's not made up information. It seems to be true that there's tremendous supply chain issues. Not enough truck drivers, they say. Not enough containers. So these are things that create, so what happens? Very simple. Goods can't get to the market. There's shortages of goods. Just like what we do here when there's a shortage of oil, the price goes up. When there's too much oil hanging around, the price goes down. It's not complicated, but that's why there, from a very simple standpoint, that's why there is inflation. And it would be more transitory or more temporary if the supply chain problems weren't being exacerbated. I'm just trying to use fancy words. No, the supply chain is problematic. And there doesn't seem to be a simple, quick solution. There are issues that are just such difficult political issues people don't realize. So when you're anti-immigration, right, then it prevents a lot of jobs that people don't want to do that new people that come to the country are willing to do. And that's something that we forget. There are jobs that some people are happy to do. First of all, being a truck driver and making $100,000 a year is not a bad job. And yet they're having trouble filling some of those jobs. It's pretty amazing. I mean, there's so many jobs now where you could make great money without having a college degree. And they're not driving a UPS truck is not it's not a terrible job. It's respectful. Owning your own little FedEx Ground franchise, it's a respectful job. I certainly understand why the fast food companies have trouble working. Working at McDonald's and working at Walmart, not great jobs. Totally understandable. Calvin, you're always cracking me up. Everybody has a different reason why they think people don't want to work. It's hard to take care of your kids. A lot of kids, get sent home from school for 2 weeks or have to quarantine or whatever. So many complications, right? Okay, 10 seconds. So I've had two whipsaws in a row. Two whipsaws in a row. I mean, just very, very difficult trading this week. There's nothing else that I can say that would make this any easier. We didn't do anything wrong. The market, it's just whipping. It's whipping up and down. It's whipping up and down, making trading incredibly difficult. Incredibly difficult. I want to look at the video and see what happened. So let it trade for a minute. The news. It wasn't that the news was late. And in fact, the news was positive, right? Or let's put it this way, the CPI numbers were up. CPI numbers were up. No, I really didn't think a 10 bracket would make much of a difference. It just moves too much. If you get a whip, there's not a lot you can do. A whip is it's our biggest enemy. A whip is our biggest enemy. So it's up and it's down. If I remove my orders, now my NQ looks like it did not get filled. My NQ did not get filled. Did not get filled. And then I want to look and see. So on my gold, so what happened is I got filled at 1777.70. 1777.70 was my first fill. And it filled me long and didn't get through our targets. It reversed so fast, unfortunately. It reversed so fast. And what's very interesting is the NQ did not fill. Speed of the market could definitely cause a no fill. Speed of the market could cause a no fill. Let's look at the video. Give me 1 second to render it. Let's look at the video. Before I look at the video, let's look at, and if you change your charts, make sure your orders are off the charts. Now, even made money on the NQ. I did not get filled on the NQ. Now, if my NQ was on SIM by accident, that's my own fault. Yeah, it was. So I'm an idiot because my NQ is on SIM. So I didn't see that. That's my fault. So the NQ looks like it would have filled short, okay? And my mistake by not having it live, I still would have lost because I lost 9-ish in gold, but it would have been much smaller loss. So the NQ did work. The NQ looks like it did work. It filled Now, just going by some people that traded it live, because you can't trust on a fast move NQ in sim. So let's look at ZN. So if you look at, so we're looking at the 8:30 time. And this is the trade candle. And the bracket, I believe that ZN very possibly could have worked, because at the time of the trade, it only moved possibly 2 ticks up. Possibly. Anybody try that ZN setup? Anybody try that ZN setup? Mark, you did ZB? Now, ZB is much more volatile and low liquidity than ZN. It's a lot less orders. So ZB, so the question is, when you put the order on, if you were down low on that candle and it moved up first, it could have filled long first and then gone short. So that's certainly possible. Let's look at the video. See if we can tell what happened. So I know what happened on gold. It shot up and then reversed. That's what it looked like happened. So let me just check the video 1 second. Hang on 1 second. So here was my mistake. I did not notice my NQ was on sim. Okay. Unfortunately, no one noticed, or I would have changed it. So here was the trade. So gold, volatile before the report. And you could see it's very fast, even when you're slow rewinding. So you could see it filled all the way at the top, all the way at the top. And that's the issue. You had no opportunity for profit because it filled, it jerked up before it moved down. So right now, my definite fix to this report is gold. Gold is really looking untradeable on this report, whereas the NQ is looking much more tradable. So let's watch the NQ move. And there was a little bit of almost a tiny delay in the NQ. And then the news comes out, and it has a pretty nice move in one direction. The NQ has a pretty nice move in one direction. So who traded the NQ? A couple of people trade the NQ live or no? Anybody trade the NQ live? Even, and what was your result on the NQ? So AJ, you traded MNQ and made money. Even, you used our setup even, the 15 bracket. So I think gold should not be traded anymore. That's two very, very bad reactions from gold. And overall, gold's just been too volatile in these current markets for this report. Whereas NQ would have worked. For people, it definitely worked. So going forward, going to have to move with the NQ. Bonds are questionable. Bonds are questionable. They're an unknown until more testing is done. You have to do more testing to be sure about bonds. The direction was short, and the unfortunate is that the index popped up first. And sometimes that happens. It just happens. The correct direction, just based on the news, one of the issues also, you had exact matching news on the most important news, 0.2 to 0.2. And then gold made a very large move after the report to the downside. So of course, very, very frustrating trading. Very frustrating. And again, for me, I'll continue, if there's reports that haven't been behaving well, then I'll trade them extremely carefully. But the reports that have been behaving well, I have to continue to trade them well. I have to trade them normally. But I think we've been told by CPI that gold probably should be not traded right now. It's too volatile. Certainly at the moment of the report, it's trading too volatile because we're not getting a reaction, not getting a tradable reaction right now. And the NQ is. So even if the NQ had not worked today, it's at least a tradable reaction. So that's something that you have to take into account. If you have a tradable reaction, then a report is potentially tradable. All right, so what's our next event? Next trade is 12:30, the 30-year bond auction. So we'll be here 12:30 for 30-year bonds. Any questions, folks? Trading post report blessing, what do you mean? I didn't see what she said, so I'm not sure what you're referring to. I'm not sure what you're referring to. Right, 150 ticks post, but the reality is that's not what we do here. People have the tools if they want to trade after the news. There are tools you have the tools to use it, but our setups are at the moment of the report. That's the main thing that we are doing. I would not, without doing some significant testing, just automatically start trading post-report because we don't have settings for it. So the way that we're doing things is at the moment. And of course, the software is a tool that if you want to set up trades, people are doing discretionary trading also. But that's not what we're definitely, that's not what we're doing generally. Okay. But there are certainly people look at the squeeze, people look at other tools that are in our software to look for trades after a trade. But right now, our main theme is we're trading at the moment of the report. Brian. Which Brian, Chantal? No, the squeeze is an extra indicator. Blessing, this indicator is the squeeze. And, like all indicators, it has delay. Almost every indicator has some delay. So yes, like today, you might have what looks like a perfect squeeze. It won't always be a perfect squeeze. Sometimes it'll be a squeeze that fires off late, and you'll be on the wrong side because it fired late. That happens as well. But Blessing, if you send me an email, I can let you know where to get the squeeze. Here's the address. Now, what's certainly frustrating for me, is I had my NQ set up and my chart was on sim and I didn't notice it. It possibly would have saved some of my loss. It might have. If it had worked, which it looked like it would have, it could have saved some of my loss, which would have been nice, obviously. So NQ looks like the better trade. Just curious about what ZF looked like. So ZB didn't look simple. Now ZF, so if you look at the time of the report, it looks like ZF had certainly a possibility of being a good move. Definitely a possibility of being a good move. So GC on a 30-second chart, because if you're looking possibly to use the squeeze, we would normally look on a 30-second chart, okay, with a momentum. So the property on the squeeze would have a momentum of 17. So you have to be on the squeeze, and momentum length is 17. So the trade's here, okay? It jerks up, unfortunately. Hits a new high, which is sometimes a place where you can risk a reversal. But if you also think about the news was theoretically positive, which could push gold down. And the squeeze had a strong momentum to the downside. So in theory, you could say that you had a squeeze signal somewhere after 8:31, one-ish. 30-second chart, and look at the move. Gold had a monstrous move. So did the NQ. Gold and the NQ moved the same direction. They moved the same direction. So, I mean, there are trades after reports, but you have to spend as much time as we've spent, designing setups. You can't go just by one. I mean, today, yes, it was great. There will be days where it's the opposite, where you'll get in and it'll reverse on you and not be great. So you have to develop a system. You have to develop a system. And a system is time, testing, etc. It's a whole system of testing. Or a method of trading. If you're a discretionary trader, you could say, well, okay, I'm going to try the squeeze. Also, depending on the size of your account, if you want to risk trading, after reports, you got to develop a system. Yeah, no, I'm not arguing at all. And you got to decide what tools do you want to use to help you in that system. Okay, folks, so we'll be back here at 12:30 for the bond report. And then after bonds, let me take a quick look. After bonds, the FOMC minutes, which is not family money trade. And then we have the oil report at 4. So we still have a whole bunch of bonds were canceled yesterday, AM. No fill. Had no fill. Pretty rare, but just no fill. All right, folks. So I'll see everybody at 12:30 for bonds. Okay? See everybody later.